Welcome back to Stocklabs for another market recap. Halfway through July now, and it was pretty brutal OPEX week for the markets. So let's just look at the major indices. Okay. So the only stuff up that was major was bonds up 1%, and gold flat to marginally up. Everything else down. So SPY down 1%, Qs down almost 1%. IWM small caps got destroyed for 5%, which kind of resulted in a lot of stuff in the market just being really weak. Basically all week from Monday on. And the Dow was down 60 bips, so kind of a relative outperformer, but still down. Okay. Industry-wise, we'll go to week to date. And yeah, so the selling was pretty broad. Basic materials down 700 bips, nowhere to hide in here. Healthcare minus 700 bips too. Kind of last week we thought that biotech might be set up for a bounce this week, but it just unraveled with everything else. Tech down 500, services down 450 basis points, and the only thing that was up were utilities, up 1%. So if you were hiding in utilities, you did okay. So in the subsectors, so only 1, 2, 3, 4, 5, 6, 9 subsectors up, and they were all utilities or REITs. So everything else, if you owned anything else other than that, it was bad. It was a bad time. Worst performers, some of the double-digit losses across a lot of stuff: oil, retail, solar. I think solar the one day was just down like enormous and didn't really bounce back in the back half of the week. So the rest, gene editing goes in biotech. But yeah, look at this. So 25 on this page, down 800 bips. We've got another 25 down at least 500, and another third page. So so we've got like 62 sectors down 500 bips, which is, broad selling. So not a lot of places to hide, like I said. We'll go through our market cap sorted screen, and okay, so 1 to 5 billion, we've got minus 4.6%. 5 to 10 billion is minus 4.5%. So no improvement from 1 to 5 and 5 to 10. So anything 1 to 10 was down like 500, 400 or 500 bips on average. Large caps, 10 to 50 billion, minus 2.8%, a little bit of improvement. And I think we all see where this is going. Mega caps, minus 1.35%, a little bit better, still down though. And Terra caps were minus 80 bips. So a little bit better than like SPY and QQQ were down 0.9 or 1%. And the biggest of the big names were only down 0.8%. So you could say that the larger cap stuff is still holding up the overall indices a little bit, even though everything was down across the board. I'll go to intelligence on our ETFs. And we have, so banks, silver, energy. I mean, energy really should be due for a bounce, just even if you weren't looking at this, just for how much it's been sold off. Tech, and what else is in here? So Latin America, emerging markets, Russia, China. So a lot of overseas stuff sort of flagging as possibly going to bounce. You probably need the dollar to come off a bit for those to really catch decent amount of momentum. We have lithium in here, so this would go with like alternative energy type stuff. But this list is, quite long, looking for bounces across some of these sectors. There was a request to look at things that are slated to go down, so I'm just going to invert these values. So I'll say -4% and up less than or equal to 35, and short list. But FAS, so banks, SRTY, IWM, inverse Russell. So these are all inverses. Actually, I'm not sure if this is this China inverse. I'm not sure. I think it's China inverse. But yeah, all inverses on here. So obviously, if the market bounces, the inverses go down, and from the prior screen, the bullish ETFs will go up. So easy enough. So not a lot rated on here for bearish signals, but the ones that are bearish are inverse ETFs, which is, you could say, bullish for the market. I will look at one other thing, just because a lot of us were keeping an eye on it throughout the week. At least I was. And I'm not going to get in the habit of sharing this algo that often, but since it was pretty close, I will. We were waiting on at least I was waiting on a 6-month hybrid oversold signal, and it sort of danced around this blue oversold threshold all week. Intraday, sometimes it dipped below, but the signal only counts if it closes below it. And you can see Friday, we closed 1/100th away from being oversold. So it doesn't count for anything. It doesn't mean, being close is not good enough to call it oversold. So it only calls it oversold if it's below this threshold. On the other hand, we did get a 12-month oversold signal on just the technical side. So hybrid score combines technical and fundamental, or it's blended, and tech score is just strictly technicals. So on strictly technicals, Stocklabs rating this oversold on a 12-month basis. Now, the reason that I am focusing more on this 6-month hybrid signal, which didn't flag, is because go overbought, oversold on here, and 6-month. So on the right-hand side, we have hybrid. And you can see that there are 5 signals on here that have been counted and logged for statistical purposes, and it's 5 and 0. So it's 5 and 0 signal. Whereas if I pull up the 12-month oversold signal, and now on the left side, the technical side, there's only one other time that this happened in the last year. So that's why I'm putting more weight on the 6-month hybrid signal, because it has more data points logged that are going to sort of provide more insight into the strength of the signal. Obviously, one data point being up 100% of the time, the one time that it happened, means less than a signal that has 5 data points that's 5 and 0. Pretty simple to understand. Now, real-time intelligence is pretty bullish, although 2 signals is not that much. Although on the hybrid side, we have a little bit of a, I mean, the upside is not rated that great. I mean, it's like a little bit of a bounce on like pretty decent percentage, but really what I'm waiting for is this oversold signal on a 6 month basis. Now, if we get a little bit of additional weakness, I mean, I don't know if a little bit, but if there's down days in the first half of the week next week, this should end up locking in on the close on one of those days if it finishes weak. If we get something where it's just sort of sloppy and the market moves up a little bit, moves down a little bit, and this sort of just stays around where it is, then it's going to remain tough, like sort of the action that we had this week, where a lot of things just fall apart, a lot of failed intraday rallies and things like that. So once this signal flags, which means it closes in oversold territory, then we're going to say that we have the all clear and we start pressing some long bets into the end of the month. At least that's my plan. So, let me just go to, where was it? Oh, seasonality. So seasonality for July is generally, I think we mentioned this in one of the prior recaps, is okay. I mean, up 1% is the strongest of the summer months. And I think during the other recap, we were already up way above this sort of average return. So we've pulled back, and now I don't know what we're up month to date on the market, but it's probably around this or a little below. So if you can think of a scenario where the market sells off a little bit more, we get the oversold signal, which says, okay, we're all clear. And then we get our bounce into month end. And obviously that would bring sort of all these statistics in line where the oversold signal works and the seasonality lines up where the bounce takes you back up into this average return or above this average return based on all these months and years of data. So that's sort of how things sort of, you can put different features together and play out how they all work together and end up making sense in the end. Now, obviously, the market could just collapse the whole way down, but generally, we're not looking for collapses, especially in the summertime. So, yeah, that's that. And thanks for tuning into the recap. We'll see how this week goes and do it again next week. Talk to you later.